With all the recent stock market volatility and global news, I've gotten the question, hey Kyle, I think I'm just going to sit out of the market and wait until things calm down and then I'll get back in. Which led me to start thinking from the standpoint of when things calm down. When does the market actually calm down? So the stock market, when do people feel good about investing in the stock market? Because I think from a emotional standpoint, feeling like, hey, I feel more comfortable putting my money at risk when things aren't as wild in the world, when things aren't as wild in the market. Emotionally, that is a viable strategy. The question is, does it work financially? Can we just sit out and wait until things calm down? And in today's video, we're going to take a quick look at about 50 years worth of market performance and some of the headlines that have gone with it to see when does the market actually calm down. Okay, so here we go. So this chart here goes back to 1970 and looks at if you would have invested $10,000 in 1970, so about 55 years ago, what would your money have grown to? Well, your money would have gone from $10,000 all the way up to $2.8 million, which sounds great, right? That is long-term compounding at about a 10% rate of return, which is what typically the market gives us over longer periods of time. But it hasn't been a straight line. It's been a bumpy line, and this is what the actual performance of the stock market has looked like. Still, if you look over long periods of time, it looks like it trends up. But if you've been a stock market investor for a while, you know that this looks like kind of a smooth experience, but it didn't feel that way at all. There were a lot of dips, we had a lot of downturns, and there was a lot of news, and things weren't exactly calm. So let's go to some of the headlines that we would have seen over the last 55 years. So all of these headlines have come out. And what you'll notice is we've had wars, we've had bankruptcies, we've had bombings, we've had epidemics, we've had just about everything that you can have when it comes to bad news. And the last thing the markets have been over any period of time is calm. And so when we're thinking about the strategy and saying, should I sit this one out, wait till things calm down? Emotionally, that feels like a great idea. Unfortunately, the price we pay for being long-term investors is dealing with the short-term ups and downs of what people are willing to buy or sell for the stock on any given day. And so the price we pay for these long-term gains is the volatility, is living through and sometimes, hopefully, trying to ignore the bad news. And so what can you do? Again, focus on your long-term plan and your investments and always know what you own and know why you own it. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.